Top Trader Stock Market Trading. Level 1. Practice VWAP Technical Analysis strategy for professional traders. What is a VWAP cross? A VWAP cross is a trading indicator that occurs when a security's price crosses the volume-weighted average price. Technical systems can typically be programmed to chart a security's market price and VWAP through candlestick patterns and trend lines drawn on a technical chart. When a security's price crosses the VWAP trend line, then a VWAP cross signal occurs. Traders typically consider VWAP trend lines similar to resistance and support trend lines. In a VWAP charting pattern, a VWAP trend line is a signal trend line charted on a candlestick chart. This price pattern focuses on the movement of the VWAP. For a trader using a VWAP trend line, it is important to understand the VWAP's calculation. The VWAP calculation goes as following. You take the security shares bought, you multiply by the security share price, and you divide all of that by the number of security shares bought. VWAP is a moving average trend line that allows a trader to visually chart the effects of a security's volume in comparison to its price. The VWAP calculation is centered around the volume a security is experiencing from day to day. Other potential volume variables that may be used in conjunction with VWAP include the positive volume index and the negative volume index. VWAP is a trend line that has two influencing factors, volume and price. Thus, several scenarios can occur from changes in volume and price. Generally, VWAP can be a useful trend line to include on a trader's candlestick chart. VWAP may be trending above or below a security's candlestick pattern. Inferences from the variables in VWAP are primary drivers of buy and sell signals for traders. The immediate effects of drastic volume and price changes that can be seen from following VWAP make the VWAP trend line a popular trend line for traders to follow. If a security's price is trending below its support level, a rapid increase in volume and price simultaneously will cause the VWAP trend line to spike significantly, crossing over the security's current price. This can create a potential bullish buy signal. Adversely, if VWAP has been high and spikes to the downside, it can be a bearish sell signal, indicating the security is expected to trend lower following the cross pattern. Using a VWAP trend line and VWAP cross can help a technical analyst to detect price movement in securities that may not yet be fully factored into the security's short-term or long-term price. Volume-weighted average price and moving volume-weighted average price are trading tools that can be used by all traders. However, these tools are most frequently used by short-term traders and in algorithm-based trading programs. The MVWAP may be used by longer-term traders, but VWAP only looks at 1 day at a time due to its intraday calculation. Both indicators are a special type of price average which takes into account volume. This provides a much more accurate snapshot of the average price. The indicators also act as benchmarks for individuals and institutions who wish to gauge if they had good execution or poor execution on their order. Attaining the MVWAP is quite simple after VWAP has been calculated. An MVWAP is basically an average of the VWAP values. VWAP is only calculated per day, but MVWAP can move from day to day because it's an average of an average. This provides longer-term traders with a moving average volume-weighted price. If a trader wanted a 10-day period MVWAP, they would simply wait for the first 10 periods to elapse, then average the first 10 VWAP calculations. This will provide the trader with the MVWAP that starts being plotted at period 10. To continue getting the MVWAP calculation, average the most recent 10 VWAP figures, include a new VWAP from the most recent period, and drop the VWAP from 11 periods earlier. While understanding the indicators and the associated calculations is important, charting software can do the calculations for us. On software that does not include VWAP or MVWAP, it may still be possible to program the indicator into the software using the calculations we've just mentioned. There are a few major differences between the indicators which need to be understood. VWAP will provide a running total throughout the day. Thus, the final value of the day is the volume-weighted average price for the day. MVWAP, on the other hand, will provide an average of the number of VWAP calculations to analyze. This means there is no final value for MVWAP, as it can run fluidly from one day to the next, providing an average of the VWAP value over time. This makes the MVWAP much more customizable. It can be tailored to suit specific needs. It can also be made much more responsive to market moves for short-term trades and strategies, or it can smooth out market noise if a longer period is chosen. VWAP provides valuable information to buy and hold traders, especially post-execution. It lets the trader know if they received a better than average price that day or a worse price. MVWAP does not necessarily provide the same information. VWAP will start fresh every day. Volume is heavy in the first period after the markets open. Therefore, this action usually weighs heavily into the VWAP calculation. MVWAP can be carried from day to day, as it will always average the most recent periods, is less susceptible to any individual period, and becomes progressively less so the more periods that are averaged. In the final analysis, MVWAP and VWAP are useful indicators that have some differences between them. MVWAP can be customized and provides a value which transitions from day to day. VWAP, on the other hand, provides the volume average price of the day, but will start fresh each day. MVWAP can be used to smooth data and reduce market noise, or tweaked to be more responsive to price changes. If a trader sells above the daily VWAP, he gets a better than average sale price. If he buys below the VWAP, he gets a better than average purchase price. On trending days, attempting to capture pullbacks towards the VWAP and the MVWAP can produce a profitable result if the trend continues.